Hi, my name is Nigel Fellowes-Freeman. I am the host of Building Tomorrow's Insurer and the founder and CEO of Kanopi. And today I am absolutely thrilled that today's guest is Alex Taylor, who is the Global Head of Emerging Technology at QBE Ventures. And he is a big part of the venture team there and the development arm of QBE Insurance, which kind of invests and builds alongside a bunch of partners and early stage businesses that are looking to very much kind of reshape the insurance industry. And Alex has a wealth of knowledge in the kind of in innovation, disruption, futurism, you name it, in terms of in the technology space of insurance. Alex has probably been there. I know that he had his own startup in the crypto space, and so I'm sure we'll find our way into that at some point today. And I know he's kind of going very deep and being very thoughtful around kind of AI, ML, kind of LLMs, etc., and how kind of they're going to be positioned over time. And so thank you, Alex. We're really excited to have you here, and I'm really looking forward to the conversation.
Pleasure.
And I think a lot of folks will know you, Alex, who will be listening, but maybe a nice place to start will give us a kind of maybe 1 minute synopsis of your world and kind of where you are today and how you got there.
Yeah, absolutely. And, it's funny, I've got one of those grandiose titles that perhaps does me too much credit, but the Global Head of Emerging Technology in QBE Ventures sort of, to Nigel's point, means that, I've got sort of 1 foot in the camp of ventures and investments. That's largely looking at the ways that we might drive QBE forward, to have some skin in the game, to participate in some of the edgier areas that, for a variety of reasons, I think that some of you might be familiar with, are harder for an insurer to do off the bat, and those are largely regulatory and risk-related challenges to doing those things internally. But on the other side, and QBE is in an interesting spot in that we don't have a group strategy team, we don't have a group innovation team. So a lot of the time, the programs of work that the ventures team get involved in fill in the blanks there. And often that's building alongside some of our portfolio companies. And you can look at our blog on our website at qbe.com/ventures to see some of the thought pieces we've published recently, looking at geospatial, looking at some of the areas around cyber and related areas. But a lot of the time, our role is to drive the thinking of the organization forward through, not only the wealth of expertise that we have in the team, but also through, driving enthusiasm and bringing out the best in our people, and giving people essentially the permission to speak up on areas that interest them, particularly related to technology and driving the insurance industry forward.
That's super interesting. And on that point, you just spoke about a bit about geospatial data. I'm pretty sure you guys made an investment in that space too, and I know I saw some snippets in a previous conference around what they're doing, and it seemed blew my mind. It'd be great to just maybe you can touch briefly on that and how you're seeing kind of that specifically, then maybe that data and how they're thinking about kind of ML and how that's impacting some of the claim stuff that you're thinking about.
Yeah, absolutely. And obviously this is at the front of a lot of people's minds right now, both inside the insurance industry and customers of the insurance industry. One thing that we're seeing is that certainly catastrophic events do seem to be becoming more frequent, more significant, more impactful. One of the trends that we're trying to follow is improving our ability to respond to major events, both before they occur, understanding what an underwriting risk might look like, and afterwards, helping our customers when they need our help most, even when there might be a huge corpus of claims, making sure that we can prioritize, we can appropriately triage and resolve as soon as possible. So we've made a couple of investments in this space. One in a company called TensorFlight, which is a machine vision-based platform that looks at both aerial and oblique imagery, so side-on angle views of properties, things like Google Street View as an example, and extracts underwriting factors, features of commercial and residential buildings that might make it both easier for us to underwrite the property, but also might help us to correct prior challenges we've had where there might be underinsurance or a miscommunicated feature of the building, or maybe the building's changed. All of these things are very challenging to identify when you insure hundreds of thousands of properties. If you can do that in an automated way and prevent a negative experience for a customer, and nobody wants to have a claim and then to say to a customer, well, you've been underinsured for 5 years and that's going to cause substantial problems for you and for us. If we can arrest that kind of challenge before it occurs, then everybody wins. The other investment we made in the space is in a company called Geosight. And Geosight is a geospatial data aggregation platform. And this is sort of one of the challenges that I think our industry has, is that historically we've always had one or two different vendors that give us space-based imagery, or they might give us accurate geocoding, or they might give us flood levels, or whatever it happens to be. Bringing all of these data sources together and matching them, so you can say, tell me everything that you know about this property. And from an underwriting perspective, it might be that TensorFlight style of data where you're extracting building features, or it might tell you about exposure to flood or wind or other catastrophic events. But afterwards, and this is the real impact, if you can bring in data from vendors like the GIC or Vexel, where immediately after a major event like a hurricane or a tornado or a flood, they do overflights, so-called grey sky flights over these areas. 24 hours later, you can have this 360-degree view of every exposure that you've got. You can see whose roof has been damaged. You can use satellite-based radar systems called SAR, synthetic aperture radar, to look at the exact level of flooding down to sort of 10 centimeter level accuracy that your properties have been exposed to. And in some cases, you can reach out to these customers even before they know that their properties experienced some kind of catastrophic event. But it also means that we can start understanding, what kind of supply chain response are we going to need here? Who do we prioritize, and whose property might be completely okay? So these kind of things are transformational for the insurance industry. Historically, it's been that claims experience that evolves over a 12-month period in some cases for major events. Knowing instantly, both pre and post, is tremendously powerful. And I'm convinced that this is going to be something that drives forward, particularly property insurance, over the next 5 years. But it's important to note, as a final thought on this, that a lot of these things are only possible because of the evolution of certain types of technology that are very nascent. So a lot of listeners will be familiar with GPUs, graphics processing units, the things that video gamers have plugged into their PCs for years. It's this same technology from companies like NVIDIA that's enabling this AI and machine learning revolution. And we're only just seeing the start of this. That the pace of evolution is going to be so quick. And the thing that I often remind people is that these capabilities are never going to be worse than they are today. Things will only improve, and they're already super powerful. But the next 5 years, it's going to be quite a wild ride in the space.
Yeah, for sure. And I think something that is maybe you could touch on as well is the impact of capital requirements post those claim events. Obviously, I know there's obviously kind of regulations in terms of capital held to pay claims, etc., and having a kind of visibility on what they potential payouts are gives you a much kind of clearer view on capital requirements. Is that true?
Yeah, absolutely. And this is such an interesting space. So claims reserving models obviously are regulatorily dictated, and they're different in every region that insurers operate. But the reason that quite stringent capital reserving requirements exist for major events like hurricanes is that there always was this element of uncertainty in terms of what your exposure was likely to look like over a 12-month evolving period, and what the capital requirements would actually be to cover for that. And the reasons that these exist is to make sure that insurers are responsible actors in the financial services community, that policyholders can be certain that their insurer has got good capital controls to make sure that claims will be settled appropriately, and that appropriate capital is held to take care of that. The challenge here, and what we can address, and this kind of technology helps us to do, is to have much more certainty about exposure much more quickly. And what this translates to historically is that we as an insurer have had to lock up and report publicly the very large amounts of capital that we've reserved for particular events. And until that sort of 12-month evolution period goes away, we can never have certainty that it's safe to release those funds back into the general pool. And this translates to a bunch of different economic effects on the operations of an insurance company. One of those, though, of course, is that we have to build into the premium the expectation of the need for those capital reserving requirements. Now, interestingly, and one of the effects of having more accuracy in reserving is it means that insurers can potentially have less reserving requirements where events are less severe than initially predicted, and most of the time there is this buffer built in just to make absolutely certain. This could translate to more effective premiums. It could translate to customer benefits. In the end, when we have more accuracy in this space, everybody wins.
Yeah, absolutely right. I think that's a kind of nice segue and I know that you and I have chatted a bunch about this over time, and it's the thing on everybody's lips right now, which is kind of AI, ChatGPT, these large language models. I believe that around every executive team at the moment, there is some conversations of A, fear, B, do we know what this thing is? Where is this, and how is this going to affect our worlds? There's a bunch of data coming out of the US by kind of your McKinsey's and those kind of folks in terms of percentage of workforce impacted, and I think there's going to be really large kind of impacts globally. I know that I had the same feeling when I first played with ChatGPT as when I first kind of went on the internet and had this mind-blowing occasion where I could access the world's information, and that blew my mind. And I had the same here. So maybe we can just kind of touch on maybe really broadly kind of thinking about AI and LLMs, like maybe some of your thinking right now. I'd love to hear about how you're thinking about it, and how maybe QBE are viewing some of the opportunities and fears.
Yeah, absolutely. And it's such an interesting space because a lot of people seem to be responding as if these things appeared out of thin air overnight, which of course is never really the case. It's just that a lot of people weren't paying attention. And it's quite surprising to people when you mention that GPT-3 and GPT-2 have been around for 5 or 6 years now in the case of GPT-2, and language models conceptually have been hypothesized for 15 years. But it's only really been in the last 3 to 4 years that they could scale to the point where we can have general public access to them, and they can actually respond at about the same speed that a human conversation does. But the mind-blowing component of this, and I absolutely love this as an archetypical disruptive technology, is that a lot of the engineers building these models will tell you that they don't understand why the technology behind large language models, the concept of a transformer, and that's what GPT stands for, of course, a generative pre-trained transformer, the activation functions in a transformer, which is basically just a fancy maths operation. It's very difficult to connect these activation functions to why we're actually getting these immensely powerful, almost human-like responses from what's been perhaps unfairly described in some media as a stochastic parrot, essentially a statistical model that spits out the most likely word to come next. And, this is where it gets into the realm of philosophy where, some people say, well, if GPT-4 is a stochastic parrot, then maybe humans' speech generation is also a stochastic parrot. And that will, I'm sure, be something that the psychologists and the philosophers will explore over the next decade. But, pivoting to the impact that it might have, and to your point, Nigel, a lot of people in their early discussions with ChatGPT, and those of us that are technical, that are using the GPT-4 API, is that sort of inflection point where we realize, this could replace certain types of human labor, and understanding what that will look like and what the timeline for that is, I think will be not only one of the most interesting macroeconomic challenges that the global economy has over the next decade, but also one of the most interesting business studies that we could possibly have too. And often, organizations in any space, it's not necessarily about what you could do, even though I'm sure a lot of companies, including QBE, are having a very close look at this space at the moment. It's about what your competitors do. And optimization is the name of the game. If a competitor can use this technology to do something that is largely manual and very time-consuming, semi-autonomously or even completely autonomously, if that makes their product cheaper in a competitive space and you don't do the same thing, then suddenly it makes it very difficult for you to compete. So everyone right now is looking over the fence and seeing, what are people doing? And particularly in regulated spaces, what discussions do we need to have along the lines of legal and risk and regulatory and privacy? So many fascinating discussions that have to take place. But what truly surprises me is the level of engagement and even excitement that we're seeing from people who have quite conservative roles in those spaces that I've just mentioned. I think everybody can see the power of this technology. And it is the great democratizer. Technology historically has been accused of being difficult to access. But the beautiful thing about ChatGPT and other language models like it, Bard from Google and some of the meta models, is just how accessible it is. People can talk to it and make it do something that they don't have the skill to do themselves. Creating a website just using words is an example. There's a great example of a technology that I saw the other day called Infinite Arcade, where you can describe an arcade game using words, and then 10 seconds later, you can be playing that in your browser, which is just profound. But
Yeah.
the most amazing thing about this space is the pace at which it's evolving. It's so difficult to keep up with the amazing things that people are creating day by day. And one of the most interesting trends right now is the evolution of models that are much easier to run. And that's the interesting component of the economics of this. A lot of people don't consider how expensive it is to run a model like GPT-4. It literally costs tens of millions of dollars a day to run the GPUs and data centers, of which it requires hundreds in order to operate, thousands, in fact, when you look at the global scale, versus what people are doing right now to optimize these models to get GPT-4-like results for models that in some cases you can now run on a desktop PC. And I think that's going to be the trend to watch, is the democratization of access to these models, not through public APIs or commercial APIs like what OpenAI are offering, but making them smaller and smaller and smaller so they can perhaps execute a specific business-oriented task, but run within inside the walled garden that an organization has to have for governance reasons.
Yeah, totally. I think one of the things I think from obviously the data set that these models are trained on are generally today are kind of the same, right? And if you have that mindset that those things therefore will likely converge and kind of have on a macro sense, have a generally similar output because the kind of the data set's the same. And so kind of I've been thinking thinking a lot about kind of proprietary data set and how important that's going to be over time, which is that's really where the value sits, which is how do you then kind of bring in your proprietary data set, which then gives a different insight and a different output. We're using the same kind of models. And obviously insurance is a data business, right? And some of the kind of most kind of proprietary things that insurance companies have is access to enormous sets of data, and it's often proprietary to them. And so are you thinking about that at all? Are you thinking about any specific use cases that maybe you're starting to play with that you're seeing within the business at all?
It's such an interesting space. And if you look at the inefficiencies in insurance, it's often the overheads of the analysis that we have to do effective underwriting off the back of unstructured information. So if you look at a typical insurance submission, let's pick workers' compensation as an example. Often you'll get an unstructured submission that contains details of a company, who's involved in the company, what they do, their claims experience, which is a really interesting one. That might, if it's a large company and they've had a bunch of claims, you might be talking hundreds of pages of documentation. And an underwriter has two choices, effectively. They can either rapidly process a submission, which means they might not be able to read all of the documentation related to a company, and that might lead to an inefficient price being sent to that customer for the product, and that might mean that you miss out on a binding opportunity. Or you can spend the time to understand that company intimately, read all of the documentation, create notes, mine it for things that might be relevant to pushing the premium in either direction based on risk. And of course, that's extremely time-consuming. One of the most fascinating areas coming out of emergent models like GPT-4 is the ability to use them in the context of other models, things like embeddings models, Ada 2 from OpenAI as an example, where you can effectively ask a question of a document or even a pre-built set of questions about a document set and tell the model to go and summarize and extract the information relevant to the particular operation that you want to perform. So claims experience is a classic example. Going into 200 pages of claims experience and saying, which of these claims were down to sheer chance, or which of these might be something that we want to look more closely at because it's due to the potentially negligence or the subjective nature of this particular business that makes it exposed to a higher amount of risk for whatever reason. If you can turn that time around into something dramatically smaller than it historically was, then that makes a more efficient product. You can underwrite faster, you can underwrite more cheaply, and even better, you've got people that do this job today that can work in partnership with a machine. From a regulatory oversight perspective, the person's still making the decision, the machine is just pointing them in the direction of what they might need to pay more close attention to. And I'm sure that a lot of the regulatory discussions in this space are going to come down to exactly how that works and how we can work within the confines and safeguards that organizations in Australia, for example, like APRA and ASIC operate, and what we need to do to give the regulator and the public confidence that these technologies are being used appropriately in that context. But from experience, if we can make more effective insurance products, and often to a customer that means better priced insurance products, and also demonstrate regulatory safeguards, that's a win for the customer. And this is going to be something that we do get a lot of engagement in. The real question is exactly how do we do that?
I think there's going to be a lag too, right? Which is historically regulation, and rightly so, is like a slower process which takes time, and that's the right thing because it has to be thoughtful, and regulation needs to be so they are correctly slow and methodical. But as we you said right at the top of the conversation, which was the speed of change in this space is so quick. I think that there will be some grey for quite some time, and like regulated regulated businesses, grey isn't great, right? And so I think that's definitely going to pose a challenge in terms of how to work closely with regulators and what can be done, what can't be done.
It certainly will, and we're already seeing early movement in this space. An example of this is the Microsoft Azure wrap of the OpenAI service, and of course, OpenAI, through, in fact, Microsoft's investment, does actually run their GPU instances. GPT-4 runs inside Azure data centers. Microsoft has created a service that's now available in some regions that lets you run a tightly regulated, highly secure instance of some of these models inside private cloud. And what that means is that you can then go to these regulatory bodies and say, even though this technology itself might be in a multi-tenant environment, it might look highly risky to do certain operations here, particularly with personally identifying information or regulated medical information from claims, for example. But we might be able to do that in a walled garden with audit and oversight and redaction and destruction of information that's provable after the results come out. It's that kind of framework that gives us and our regulators additional comfort that these things can be done in safety. And I strongly suspect that's the direction these things are going to go in.
Interesting. Do you think that there's use cases within kind of fraud detection? Do you think there's do you think if you like, obviously we've spoken a little bit here about kind of underwriting as a use case, kind of efficiency in terms of, and obviously kind of we're in this kind of first innings, right? We're so early that it's kind of, I guess, it's hard to see a long way forward, but also your kind of mind wanders to a bunch of different spaces. And obviously thinking about the value chain, we've spoken a little bit about maybe customer servicing and a little bit about kind of underwriting. But I guess, is there anywhere within kind of fraud and maybe the experience layer that you've been thoughtful about?
I tend to look at that kind of question from the other way around. It comes down to straight through processing. And the question that I would ask is, can we find opportunities to rapidly settle claims that are obviously simple and potentially don't need human oversight? So an example of that I saw in industry just a couple of months ago was reading descriptions of car accidents to determine what vehicles might be a total loss that are written off and that we can do an immediate cash settlement in. And this is the difference between the laborious task of sending out an assessor, looking at the vehicle, writing notes, a person making a determination in back office. This can take days to weeks in some cases. If a machine can say that vehicle is definitely a total write-off based on the description, we can settle that today. We're at the point where the customer, as long as they're okay, and obviously we hope they are in that kind of circumstances, they get home and find that their claim's been settled already, or that their vehicle might be automatically replaced and it's waiting in their driveway, then you start to get this much better experience of insurance compared to the delays we've historically had. What that means is you can then focus the human's time and attention on these more complex claims. And there's always going to be more complex claims, but I strongly suspect that with a lot of this technology and computer vision, like we talked about before, and large language models for unstructured data, or even with the multimodal models like we're seeing with the so far unreleased yet publicly demonstrated GPT-4 image recognition capability, we're going to get more and more claims that can be automatically processed with human oversight. So there'll still be someone ultimately responsible for these things, but the volume of claims that a single human can process and will go up dramatically, and it will get dramatically faster. And I think that's going to be the greatest experiential shift in insurance, is the way that claims operations work as a result of the availability of this newer technology.
I think that's a a really interesting philosophical question that we will only find out over time, which is kind of when you think about, is it that jobs will be lost, or is it that we will be able to do more with the people that we have? And I think there's two schools of thought, right? Which is actually, I guess, kind of when we put our hats on in terms of kind of from our company perspective, which is we have a backlog that we can never get to, and actually kind of engineering now is 25% more effective, and so it doesn't mean we lose engineers, but we're just actually getting through 25% more work, versus the kind of philosophy of no, like we were going to lose kind of mid-level engineers and kind of QA engineers because there's going to be a bunch of unit tests and end-to-end tests that are done without even everything out of the box. And so, and like you just spoken about there, which is kind of in the kind of claim space, not replacing, but making more efficient. I think it's a really interesting debate, isn't it?
It absolutely is. And I think the great thing about disruptive technology in general is that it acts as a filter for business models that can't engage to drive additional efficiency. And that's really what we're seeing here. There will be companies that can't compete as a result of lack of engagement with technology that they really should have started thinking about now or last year or the year before that. And exactly where those companies come from that might not be able to compete is probably still up in the air. But we are going to see business models that fundamentally don't work anymore, and ones that become more efficient and make it hard for certain market operators to stay, competitive. And software development is a key example of this. So there's a great tool that I highly encourage everyone to download and have a look at. It's called the Cursor Editor. You can find it at cursor.so. It's a from the ground up pre-built AI-driven code editor. And it's so accessible to non-developers that it's mind-blowing. You can start it and run the demo immediately, and it says press Control K and describe the piece of software that you want me to write. So a great example is, make me a website with 4 red buttons arranged vertically, where when you press each one of them, it tells me a random joke, and it will create you that website. And then you can select a block of code and say, explain this block of code for me, which it does. Or, select the whole thing and edit it and say, now I want the buttons to be green, not red. And it shows you what it's changing in order to do that. So this not only acts as a great development tutor for people, but to your point, Nigel, it will transform the nature of software development, because we've got these tools now that can work dramatically faster than a human can, meaning that these higher order, potentially human requiring components of software development and architecture can be the things we focus on, rather than, dare I say it, the drudgery of implementation of things like unit tests, to your example.
Yeah, I think I was trying to think about kind of who are going to be the budgies in this, in terms of budget, the canaries in the coal mine, in terms of seeing which is right, which is efficiency versus kind of job loss. And I think about and especially with this, specifically within this example, the big software houses like Cognizant and Accenture, those big houses, they are so incentivized to solve this problem because I don't know how many people they have that are kind of on the tools doing, I don't know, hundreds of thousands, like 800,000 million, whatever massive. It is, massive, right? And so I think they are so incentivized to do this. I think looking to those companies of how they're impacting, taking these things on, will give us a really good leading indicator.
Absolutely. And, a really interesting disruptive space with this technology is cyber and cybersecurity specifically. So there's some really good examples floating around on the internet at the moment where people have pointed GPT-4 at code bases of open source software, or in some cases, proprietary software from their own organization, and said, go into the source code and find a way to exploit the software that a human hacker might be coming up with, in the next month or whatever, that might result in a loss. And a lot of the time, it's pretty good at finding examples in code bases that a human, through their oversight, has left open that might result in a breach. And I'm already seeing examples of platforms popping up. There's an example, there's a company called OneLeet, LEET.com. And they describe themselves as a generative AI-powered cyber penetration testing firm, where we're seeing a role that was traditionally a human being being replaced by a machine that can read millions of lines of code, find opportunities to penetrate it, and then pass that over to a human to validate. So again, it's this person-machine partnership that we're seeing that's not necessarily replacing jobs, but making human labor thousands of times more effective than it would historically have been. And I think that's the real game changer. It's an augmentation rather than a replacement in most cases. And that's the thing to remember. And it goes back to my comments before about the nature of what a stochastic parrot is. There's no motivation in a large language model to perform a task of its own accord. They're robots in the truest sense. They do the bidding of their human masters. Now, that's not necessarily the way it's always going to be. And OpenAI has a company motto of wanting to create artificial general intelligence. So I'm sure this is going to change dramatically over the next several years. But right now, these machines perform instructions as defined by what we want them to do. And that's tremendously powerful if used the right way. And it's one of my favorite terms at the moment. I'm sure some people have seen this. There are jobs popping up for so-called prompt engineers. They're very well paid in Palo Alto right now if anybody wants to go and get a new job there. But writing English sentences or sentences in any language, in fact, that make these models more efficient to particular tasks, that's going to be an area of profound employment growth over the next several years. So right now we're actually seeing the creation of jobs as a result of this technology. And I think that's fantastic.
Yeah, totally. I agree. It's a really nice place to stop there, I think. And I know we could talk about LLMs for a very long time, but I want to pivot very quickly into crypto. And reason being, I know you spent a bunch of time there. And I think that both thinking about blockchain and crypto, and NFTs have obviously come off the board a little bit, but kind of I think it was just Wild West for a while. And so I've heard you speak about a little bit about this before. How do you think about the insurance sector in this space in terms of, I know, let's just maybe I'll pause there. What do you think about kind of insurance in the crypto and NFT space?
It's such an interesting space. And obviously to your point, it's been an interesting area of focus for a while now, because for a while NFTs looked like they were the new hot thing. Everybody had an NFT product out there. Some of the valuations for these products was just obscene, in my view. A lot of froth and bubble, as there generally is with newer technology.
Yeah.
One of the clear things that's emerging is the nature of trust and how blockchain fits into what trust actually is. And insurance is a very interesting space, because an insurance product can only exist, of course, if you have trust in the company that you buy a policy with, and also the regulator that runs the environment, the financial environment that insurance company exists in. So, a blockchain product or a blockchain insurance product between an insurance company and a customer, when it's singular in both of those senses, is very hard to justify, because without that trust, you probably wouldn't be buying the product in the first place. One interesting trend we're seeing, again, is in the regulatory space. And this is where you have to have information exchange between multiple competitive parties, preserve the privacy of your customers and preserve the competitive landscape as overseen by a competition regulator, but for reasons of efficiency still need to send information provably between participants. And back to the anti-fraud theme as an example, there was an experiment in the Australian insurance industry a few years ago looking at exactly that problem. How can we prevent things like double-dipping claims fraud by looking and comparing records between insurers, when in fact the transmission of information between insurers on the scale and nature and composition of our books might from the outside look anti-competitive. And there's a bunch of really interesting technologies you can use in combination with blockchain, things like privacy-preserving set intersection, which is in fact the same technology used for the US no-fly list. When you tie these things together, you can create an environment that you can use technology for the common good, you can preserve privacy, and you can also have competition and regulator oversight to make sure that things are being done in accordance with the law. And really, we've sort of got these two spaces right now. One of these is insurance products dedicated to crypto and blockchain assets. And certainly there are products out there underwritten by some of the more imaginative Lloyd's syndicates that will insure Bitcoin deposits, some will insure Ethereum deposits, some that will insure NFTs against theft. And on the other side, you've got the use of the underlying technology in the form of blockchain and smart contracts to create insurance products themselves. So there's a great example called Ether Risk that some of the big reinsurers participate in. And Ether Risk is essentially a smart contract-based parametric insurance product creation engine. So an example of this is their hurricane insurance product, where you can essentially drop a pin on a map and draw a circle. And if a hurricane occurs in that region, you get automated and publicly visible settlement on that policy, and you can see the reserving process, you can see the capital controls. So the question we have to ask ourselves here is, are we going to see a migration of public audit, which is a very expensive process that insurers and financial services companies have to go through, to that shifting to a blockchain environment, dramatically reducing the costs and overheads and potentially security of those environments, to something where we've got these autonomous products that still fill a gap in the market that might not need the overhead of a large insurer? And that's a really fascinating question to ask.
Yeah, and what would need to be the push, do you think? What's the lever that would cause that shift? Have you got a sense of like what's the because it feels like a big move, right? And so have you got a sense of what that would take?
Yeah, and it's a really interesting question to look at, particularly in terms of regulatory engagement. And a great example is Singapore. The Monetary Authority of Singapore is an extremely innovation-minded organization, and a lot of blockchain engagement in banking and insurance and related products in recent years has come out of the MAS. And the reason I think that we're starting to see this is that organizations like the MAS recognize that efficiency is a driver of competitive products. But you can't operate these things in a vacuum. You can't decide to fundamentally change the nature of financial audit because the regulator will say no. And these are very important things to get right because audit exists for a very valid reason, of course. But where we've got a regulator pushing for that, and some of the best blockchain initiatives globally in financial services have come from regulatory push saying, industry, you should look at this technology because we think it's going to be transformative. That's where we're getting the greatest push for change. And a lot of the international monetary settlement engines that we're seeing in the blockchain and cryptocurrency space have come from regulators saying to the banking industry, as an example, the way that you run today is extremely inefficient, but there might be a better way. We give you permission through these experimental sandboxes to go and play with this technology and to bend some of the traditional rules up to a point that we have here to see where the future might lie. And these sandboxes, and some of them exist in Australia today, and some companies are participating. This is where we're seeing the greatest innovation in blockchain. And I think that is the right place for it at the moment, where there are obvious efficiencies and demonstrations that something can be done more effectively, potentially with less people or with less money. That's where these things tend to shift into production use cases. But it's still a little bit the Wild West, and failures like FTX is an example of that. That's something that people glance sideways at very carefully to look at the relationship between the technology and some of the, dare we say it, cowboy operators that give these things a bad reputation.
Yeah, totally. And I think obviously you've spoken a bunch there, and this space is very kind of, I guess, data focused, right? And something we haven't touched on yesterday that I'm really interested to get your thoughts on, an insight, looking kind of at open banking and maybe the slowness really in relative terms of its engagement, both in Europe and obviously here as well. And obviously we have in the Australian market open insurance coming. What coming is in terms of what year it comes is there, I guess, an open question, but interested in how you would be thinking about that as an incumbent insurer. I'm sure it's something that's kind of been bandied around a bit in terms of how you're thinking about it. Just how do you, how are you perceiving open insurance, its opportunities and customer benefits, I suppose?
It's a really interesting space, and there's really two directions that this can go in. And some of the discussion in industry so far has been around what does open insurance actually look like? And we look at the energy sector, we look at the telecommunications sector, and there's sort of this difference between exchanging information that you might require to buy the same or a similar product with a competitor. And obviously, open insurance, open banking is designed to encourage competition and the ease or the reduction of friction in changing providers. And that should be commended. Competition is always a good thing, and it creates innovation in industry. But there's this difference between the information exchange to buy a product and exactly what does need to be exchanged and what is the intellectual property of the source organization. And a classic example is what we were talking about in geospatial before. So if insurer A engages with a geospatial company to very expensively buy underwriting factors related to a machine vision platform like TensorFlow, for example, to understand that property intimately to effectively price the product, does open insurance mean that we have to take that expensively acquired data that we use to underwrite that property insurance policy and send it to a third party, potentially for free, so that they can underwrite that product without the burden of having had to buy the data? And this is, of course, being applied much more directly now. Historically, and I'm sure a lot of listeners will be familiar with this, insurance was based on risk pools. It was never really based on the specific information that we can observe objectively of the risk itself. I mean, motor insurance is a classic example. It's based off make, model, year, kilometers driven. It used to be based on gender, but not so much anymore, and age. And then you would be put into a risk pool, and that translates to a premium. Now we're getting down to that specific risk. So telematics is an example in the motor insurance space. So if an insurer builds a telematics platform and very expensively operates that, is there an obligation, therefore, because we've been underwriting on that, to give that information to another insurer in order for them to underwrite a similar product? And settling that question, I believe, is probably one of the most important things to get right as to what the information boundary actually looks like. But open insurance will be transformative, and there's a lot of opportunities in the market for providers of platform that ease that transition into this sector. And certainly if we look at telecommunications and banking and energy as examples, there's some great companies that have popped up that make retrofitting open insurance or open banking or open energy into existing systems. And I think it's going to be a massive growth area. It certainly has been in other international jurisdictions where it's starting to take place, and the UK is an example of this. But I can tell you now that a lot of incumbents will struggle because of the difficulty of retrofitting some of these concepts into, in many cases, quite dated systems.
And many systems, right? Not just one, being able to give kind of access into multiple systems. Now, we are almost at the end, Alex, but we ask the final question to all of our guests. And obviously the title of the podcast is The Future Insurer. And so I'm interested in terms of what do you envision as the future insurer?
I'm very confident in saying that we're going to see the augmentation of what's traditionally perceived as a pure risk transfer product. That is insurance, buying a policy to cover a specific risk and then being able to claim on that if that risk occurs, to a partnership with customers in a number of segments. So based on what I was saying before about getting much more insight into the specific nature of risks, if we possess information that suggests that a particular customer is more exposed because of the nature of their risk, the way they're driving their car, missing roof tiles on their building, do we as a sector have an obligation to work with our customers in order to reduce that risk if we know there's an increased likelihood of something happening? So I see insurance moving towards a customer partnership on risk with the traditional risk transfer products as a backstop, but much more than that, helping people to understand how they can participate in risk reduction as well. And I think there's going to be so much involvement from the insurance sector and innovative InsurTech players in this space as well.
Alex, thank you so much. I think I always find it, listening to you and having this conversation is so inspirational in terms of thinking about what the future holds and where the industry that we're both involved in is going. I think when you kind of sit back, look at some macro trends and think about the pace of change and where we're all in kind of all together working to take the industry, it is fantastic. And so thank you so much for your time. I really appreciate it. I know you've got a bunch, and I'm not sure which country you'll be in next week, but I wish you well. Take care, and thanks again for your time. I really appreciate it.
Thanks so much.